Ladies and gentlemen, welcome back to another edition of Tuesdays with Turbo. Man, we got a great one. Got a great show for you guys and gals this week. Hope everyone's having a fantastic week. Hope everyone survived the Cass County Fair. And it looks like the weather is going to be rather nice, at least-ish, maybe. Looks like we're going to get some much-needed rain. Hopefully the severe stuff stays out of the way, because the last thing we need is some more wind, hail, and all of that jazz. So let's just not even put that into the ether. Good thoughts, good weather, a little bit of rain mixed in, because, like I said, we need it. We need it. But today, on today's show, I have something very special. We're going to kind of parlay off of what we did last week with the covered, not covered, or depends style of show. We're taking some insurance myths to court. You are going to be the jury this today. You're gonna say if it's true, false, or it depends. So drop your guesses in the comments. We're gonna go over home, auto, business. We're gonna go all over the whole gamut here, ladies and gentlemen. But before we jump into that, my name is Ryan Turbo Jackson, and I am your insurance resource. And with videos like this, I love to do educational stuff. I love to just kind of bust myths, if you want to keep it going that way, or misconceptions, because a lot of people think they know what insurance is, know what they're paying for, know what's covered and not covered, but the vast majority of people don't. And that's where videos like this come in handy, and that's why I love doing these. So yeah, we're doing there it is. As you can see, insurance myth court. So we're gonna bring up some. I've got 10 myths here. We're gonna determine whether they're true, false, or it depends. Now, before we get into the nitty gritty here, everything, like I say with everything, a lot of these situations are very company dependent. So before you take this to actual court, make sure you check with your agent and do a quick policy review. And as always, if you're looking for us to do a policy review, I would love to do that. I will post my phone number and email at the end of the show, so stay tuned for that. But before we get into all of that, yes, like I said, insurance myth court, true, false, or it depends. So let's get kicked off with our first case here. Case number 1. We're going to be talking about red cars. Red cars. First of all, are insurance rates higher on red cars? Is that going to be true? Is that going to be false? Or is it going to be depends? Now, when it comes to your auto insurance, a lot of things go into it. How much you drive, what's the use case, the actual safety features, the year, make, and model. But is color actually one of those factors? And the answer is false. The answer is false. Now, what we see, we don't even know the color when we're doing quotes or when we're servicing your account. Now, yes, the VIN number does in some form or fashion provide the color of the vehicle, but that's not used for rating. So yellow, red, blue, black, white, doesn't matter. And what's funny is that people will, when they call to make changes or to kind of get questions on their coverage, what's the comp deductible on my white car? We don't know. We don't know which color it is. So color plays zero factor in any kind of rating. So that one is indeed false. It is indeed false. So we're going to continue with the with the auto side of things. Case number 2. Does full coverage, and we're gonna put full in quotation marks, does full coverage cover everything? Now, there's what a lot of people seem to think is that there's PLPD, which is personal liability and property damage, and full coverage are your only two options when it comes to auto insurance. And that PLPD really doesn't exist anymore. It's just liability only. And full coverage, is there really such a thing as full coverage? And the answer here is it's indeed false. Nothing is fully covered. Mechanical breakdown is not covered. Normal wear and tear is not covered. When it comes to your your personal property inside the vehicle is not covered. If it's used for business, there could be a potential coverage gap there. Rental car, there could be some gaps there. And everything that does not have a deductible. Now, with some companies, they refer to it as comprehensive and collision. Some companies take that comprehensive word and just throw it out, and they replace it with other than collision. So it kind of gives you this feeling that it's more encapsulated, and there's fewer gaps there. When in the actual state of things, other than collision and comprehensive are exactly the same thing. So keep that in mind, that there is no such thing as full coverage on your auto, because there's certain things that carry deductibles. There's certain things that just aren't covered. And like I said, there is nothing that is 100% fully covered. So that case is indeed false. Case number three, Michigan no fault means no one is responsible. And I've went to great lengths about trying to break down the Michigan no fault as compared to Indiana's, just because we are so close to the Indiana border. What's the difference? Why is Indiana's auto insurance less expensive? We went into that, but just to kind of attack it from a different realm here. Does Michigan no fault means no one is ever responsible? Is that true, false? Or is it depends? Let's take a gander at case number 3. Michigan no fault, no one is responsible. And that one is also false. And you might be saying, well, what do you mean? No one's at fault. Why? There's no responsibility. Michigan no fault doesn't mean the fault doesn't matter. What it means is that if you and I are in an accident, my insurance takes care of me, mine, and my property. Your insurance takes care of you, yours, and your property. Now, yes, there is some level of fault here, because police report who caused the accident, and that does affect your rating. Now, fault can directly affect property damage, deductibles, mini torts, liability lawsuits, driving records, and future insurance pricing. So that's where it comes down to it. So if you're involved in an auto accident and someone hits you, you're not affected as much or any as compared to the person that was actually doing or causing the accident. So is it one of those where everyone gets off scot-free? No. If you've ever been in an accident and you were at fault, a lot of times there's tickets being issued, so your driving record is affected. And when it comes to your renewal, because you have that at-fault accident on your record, that means your rates are going to be higher. So yes, indeed, there is responsibility. But we here in Michigan bypass the litigation portion where you have to go to court, and then it's kind of deemed that way. So it's more of a fast track as opposed to just no responsibility. So that's case number 3. Case number 4, we're going to continue down the auto realm here. Insurance always follows the driver. Is that true, false, or does it depend? Is it true, false, or does it depend? And the answer here is it's going to depend here. It's going to depend here. This is one of those, again, you want to check with your agent. You want to make sure the rules of whatever company is covering you. But coverage can involve the vehicle's owner's policy, the driver's policy, who gave permission, why the vehicle is being used, who lives in the household, and policy exclusions. Keep in mind, regularly driving a vehicle without being properly listed can cause serious problems. But in other words, borrowing someone's vehicle once is different than driving it every Friday. So keep that in mind. So it doesn't always follow the driver. It can, it's one of those things. It just depends, and it's very, very circumstantial. So let's go down here. I changed my notes up here a little bit. We're going to be taking a look at some homes for sale. We get this all the time. My home should be insured for its market value. And this is a very, very common misconception and something we deal with on a day-to-day basis, whether it's a new purchase or it's a current client saying that, well, I got my renewal, my dwelling coverage went up a little bit. There's no way I could ever sell my house for this. And when it comes down to kind of brass tacks, when we're talking about home value, there's three different things, three different values we want to keep in mind. We want the taxable value, we want the market value, and then we want the replacement cost. Those are three very independent numbers. Taxable value is how much you get taxed on the value of your home. The market value is how much someone is willing to buy it for. And the dwelling coverage or the replacement cost is if there's a total loss, how much would it cost to rebuild? So with that being said, case 5, my home should be insured for its market value. Is that true, false, or does it depend? And I think I kind of gave the answer away here. This, again, is false. Market value includes location, land, school district, housing demands, neighborhood, local property values. We see this a lot around here, in particular around lakes, because lakefront property is far more expensive than just regular acreage. And I always give the example, if you're purchasing a home that's on a very, very popular lake, and it's 1,000 square foot cottage, but you're purchasing the purchase price is $500,000. There's no way an insurance company would insure 1,000 square foot house for $500,000. And you might be saying, well, why wouldn't they? Well, you would have to encase the entire house in gold at 1,000 square feet for it to even come close to being $500,000 to rebuild it. Now, what they've seen in the past, and now we'll get to that. If the company would insure it for what you paid for it, as opposed to how much it would be to rebuild the home. Not to say you, because I know all the folks watching this are very upstanding folks, would not do this, but there are some they're like, all right, well, I bought this for $500,000. It's going to cost $100,000 or $250,000 to rebuild it. Maybe it burns down. I rebuild it for $250,000 and $250,000 goes into my pocket. Not to say that you would do that, but there are some in society that would do that. So that's kind of the reason why we don't insure things for what you paid for them. It's how much it would cost to rebuild it. And at least in the state of Michigan, it is illegal for lenders to require that the dwelling coverage or replacement cost be at least the purchase price because of certain things like that. So, and again, that's something I deal with on a day-to-day basis where lenders try to argue this, and it's like, no, that's not the case. Here's a different set of documents that will suffice, so our client can get to the closing table and get this purchase made. Would be covered, but water damage is not a one type of claim, a single type. There's many different types of water, so that's why this case is indeed false. Case number 7, we're going to be talking about if you own a rental property and you are the landlord, does your landlord policy cover your belongings? And you might be saying, well, Ryan, why would a landlord have their personal property or belongings at their rental house? And a lot of times is indeed false. Now, the landlord policy also does not give coverage to the tenant's personal property. That would be covered on a renter's policy. Now, when it comes to the landlord's personal property, that would come from their homeowners policy. So there would be coverage with some. Again, this is something you would have to check with your, if you are a landlord, and you are keeping personal property at a tenant's location. Check with your agent. Some companies will allow up to 10% of your personal property to be off premise. Some will give you the full 100%. So again, dependent on how much. But as far as the landlord policy is concerned, there is no coverage for the landlord's personal property. A landlord, the basic landlord policy covers the structure and liability. That's it. There is some companies will offer like some incidental landlord personal property, but as far as relying on that, I wouldn't. So yeah, just covers the building, not the renter's furniture, electronics, clothing, additional living expense, or personal liability. That would be a renter's policy. And so yeah, does not cover the landlord's personal property. Case number 8, we're going into home business here. My home insurance automatically covers my home business. Is that a true, false, or does it depend? Is that true, false, or does it depend? And the answer here is it depends. A home policy may provide little or no coverage for business equipment, inventory, customers visiting the home, professional mistakes, or business-related injuries. This matters a lot and we see this especially nowadays, online sellers, bakers, photographers, contractors, consultants, daycares in particular, and farm stand operators. If money's changing hands, tell your agent what you're doing, just so that there is no gray area. There is no when it comes claim time and the adjuster goes out and they're like, oh well, Mr. and Mrs. Smith, you have a daycare set up here. There is no coverage at all because of the business on premise. Some companies will allow for incidental businesses. Some companies require a full-blown commercial policy. So again, this is something that you want to make sure with your agent. Double check. It's always best to ask the questions to be proactive instead of trying to cover your butt in a reactive basis. Case number 9. We're talking new rides, new hoopties. Insurance pays whatever I originally paid for my vehicle. This is kind of an easy one because we've all had at this, I'm 45 years old. Most of all of us have had a total vehicle at one point in our lives. And remember back, did your insurance company gave you what you paid for the vehicle originally? If you bought it brand new? This one's kind of an easy one. This one is indeed false. A totaled vehicle is generally value based on its actual cash value immediately before the loss, not the original purchase price, remaining loan balance, sentimental value, or the amount needed to buy a brand new replacement. There are some additional coverages you can pick up. Loan or lease gap coverage can matter when someone owes more than the vehicle is worth. And we see this a lot, and this is a question I get quite frequently. And what I always suggest is when it comes to loan or gap coverage, purchase it from your lender. It's usually less expensive. Most of the companies I deal with when it comes to loan or lease gap, you have to be the original owner. So if you're buying a used vehicle, they won't even offer that. If you purchase it if you go through a lender or the dealership, most times it's very inexpensive to add that loan or lease gap, and it can come in handy when something like that happens, just to make sure your butt's covered. So again, always highly suggest that little gap be filled with gap coverage. But again, far easier to obtain through your lender or the dealership as compared to an insurance agent. So just another FYI. And lastly, with claim number 10 or case number 10, we're going to be talking about claims. Filing any claim automatically raises your rate. Is that fact? Or is that true, false, or does it depend? And this one's kind of tricky. Is it true, false, or does it depend? And the answer here is it's going to depend. It's going to depend on a lot of things. It's going to depend on a lot of things. It's going to be very company dependent. Some companies will allow you to purchase endorsements that in the event of a claim and you do file a claim, you don't lose your claims free discount. So again, that part of it's very company dependent. It also depends on the type of claim, who's at fault, the claim amount, previous claims, like I said, company rules, state regulations, loss of a claims free discount, or overall market conditions. So just because you file a claim does not mean your rates are automatically going to go up. A lot of it has to do with what happened. And like I said, with company rules, there are, if we want to look at the home side of things, there are some companies that your rate doesn't, if you file a claim that's weather related, they don't rate for that. So now if there's more than one in a short amount of time, then we're getting into a little bit more murky of waters. But if it's just one and it's weather related, some companies don't rate for that. On the flip side, with your auto, we talked about, who's at fault. Well, if you're not at fault, most of the time, companies won't rate for that. Or if they do, it's a very minor amount. And a lot of that has to do with the amount of the claim. Glass claims, very company dependent as well. Again, it's more the how many have you had in a certain length of time. If it's just one in the last 3 years, have a very good feeling your rate's not going to be affected. Towing, not going to be affected unless it's overused, which short story. Oh, I won't get into that story. I'm pretty sure I've told that story before, and again, it's always beneficial to talk to seeing small deductibles, especially in the home side, go out the window, and they're starting at $1,000 as compared to a few years ago, $500 or even $250. So again, insurance is not a maintenance policy. It's an insurance policy. So that has been our trip to the courthouse. Insurance myths busted, or depends, or which we didn't have any of them that were true. But that has been today's show, ladies and gentlemen. I hope everyone has a fantastic week. Let me know your questions. Let me know your concerns. Let me know if there's a topic you want me to hit on one of these videos. I'd be more than happy to help. And with that, I told you at the beginning, I'll let you know